In India, do we need to pay tax for virtual digital asset? Yes. Now we have to pay 1% tax on virtual digital asset that we are going to sell from July 1, 2022. In this video, we are going to see about the TDS on virtual asset coming under the section 194S in the Income Tax Act 1961. Let's get into the video. The CBDT Circular has clarified that the buyer of the virtual digital asset is required to deduct tax at the time of paying money to the seller of VDA. It is applicable also to peer-to-peer transaction, which means decentralized exchange platforms. The TDS rule would come in force from July 1 for transactions of more than Rs 10,000. If you gift a virtual digital asset, it will also be taxable in the hands of the recipient, one who receives the gift. For what purpose did they implement this tax? The government believes that this 1% TDS is to trace the transactions and to prevent the tax evasion. Already, the investors of digital asset have to pay 30% tax on income they gain from the digital asset. However, you will only have to pay tax on your income or profit from cryptocurrencies and not for the entire transaction. For example, if you bought Rs 1 lakh worth of crypto asset and sold them at the end of the year of Rs 1,50,000, then a flat 30% of tax is applicable on the income of Rs 50,000. As an investor, you have to pay Rs 15,000 as a tax on that financial year. Now, what's the difference between 30% tax and 1% TDS? On 30% tax, the investor have to pay only for the profit they gain. But in 1% TDS, the seller have to pay for both profit and loss he gained from these virtual digital asset. Where will the 1% TDS be applicable? If you buy a virtual digital asset, no TDS is applicable. If you sell, there will be 1% TDS applicable on total order value. For example, if you sell Bitcoin on CoinDCX platform at Rs 10,000, there will be a deduction of 1% TDS on 10,000, that is Rs 100, and transaction fee 0.2% on 10,000, that is Rs 20. This transaction fee may vary depend on the platform. Hence, the seller will get Rs 9,880 instead of Rs 10,000. What if both the parties exchange their virtual digital asset? In this case, both the parties are the buyer as well as the seller. So, they both have to pay the tax and show the evidence to each other. How to escape from this TDS? First, this TDS is not applicable to the foreign exchange platform. So, if you trade on foreign exchange platform instead of Indian exchange, you can escape from this 1% TDS. Second, there will be no TDS on holding your shares. Third, this one is for those who paid income tax. You can claim your TDS refund at the time of filling of income tax return for the financial year. To know more financial content like this, do subscribe to our channel.